What's going on, everybody? It's Rod with POW Group. Welcome back on The Pursuit of Wealth, your home for MJ Stocks, crypto assets, news, and interviews. Today is Tuesday, May 13th. Hope you're doing awesome. In this video, we're going to take a look at SNDL. There's a must-see trade setup that's forming right now. Spoiler alert, we could see another leg down. There's a bearish pattern that we could potentially see confirm. And we had a bear flag. That target has been reached, but there's another one forming. So I think this could be a nice trade setup and a nice swing trade opportunity for those that are interested. But obviously, at these prices, anything around these levels, at all-time lows, not bad for the longer term. But I'm going to show you a nice trade setup that we can use here. And again, not financial advice. This is for entertainment purposes only. Don't buy or sell anything based on anything that I say or write, but take everything that I say with a grain of salt. And if it's something that makes sense to you, then you can take advantage of it. But I'll give my thoughts and opinions on the price action in the days, weeks, months ahead. We'll bring up the price chart in just a moment. Before we do, make sure to smash the like, help support me in the channel. And if you're new, you can subscribe, tick the bell, you'll be notified on any future videos or when I go live. And full disclosure, I do own SNDL in my portfolio. Very bullish on the company long term. You can follow us over on X as well, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. So jumping into the daily time frame here on the SNDL chart, you can see on the daily time frame and this is on the NASDAQ, they mentioned that they might be kind of they're going to explore different ideas, and that nothing's in concrete, set in stone yet, right? We don't know for sure, but they're exploring the potential of delisting from the NASDAQ and maybe just operating like an MSO on the OTC. And they just applied for the CSE, the Canadian Securities Exchange. They might even apply for the TSX and then forfeit their NASDAQ exchange listing and then just trade on the OTC, just like a Curaleaf or some of these other multi-state operators. So we'll see what happens there, but this is on the NASDAQ, so everything's in USD. If we take a look at the daily time frame, you have your high, you have your low, lower high. It was a weak bounce, and we're actually confirming the daily bear flag. And then you just take your measured move there from the high to the low, move it out to your 0.32 fib, and it's saying we're targeting about 115 here would be the next target. So we have the low there at 126. It was essentially a triple bottom, and that was a weekly bear flag. So if we zoom out to the weekly, you can see here this other fib, the more yellowish one, high, low, lower high. We had a weekly bear flag targeting saying 125, and we hit 126. So that was target reached to perfection. So as of right now, this is the trade setup that's presenting itself. So you have a clear level to go off of. What you could do is you could look to enter on this weekly consolidation. And if we just hide that for a moment, zoom out to the weekly time frame, you can see here we have our low, high, higher low. And if this low holds here at 126, we could potentially change this weekly trend. A lot of names are starting to do so. For example, VFF had its news that it's going to be basically doing away with its veggies business. They're going to be kind of creating a joint venture in Vanguard Group, and they're going to completely divest that away from their MJ business. And the stock was absolutely on fire today, and even more so, it was up to $1.50 yesterday after hours. So we're starting to see momentum come back to the space, and that actually confirmed a weekly uptrend here with a low, high, higher low, and it was a weekly bull flag targeting 107. So we came very close to hitting that target, and we're starting to see the rest of the sector heat up in a big way as well. Some other names, Curaleaf, we were at $1. That's Canadian as well on the TSC, on the Toronto Stock Exchange. Then we hit $1.54. So we're starting to see some momentum come back to the sector. It's still going to be, there's still a long uphill battle, but even CGC, we were just down at 77 cents, and it saw a high of $1.65. So off of the low there to the high of that bounce, it was up roughly 110%. So we're starting to see, some names kind of outperform, and there's always going to be leaders and laggards, and the whole sector doesn't track each other down to the day, the second, the minute. It's going to be on the longer term time frames, right? On the monthly, the 6 month, the yearly chart, they all tend to resemble one another. So at the moment, a lot of names are starting to confirm weekly uptrends. There's even some bull flags in the mix. A lot of names are starting their weekly bounce. For example, the weekly oversold bounce. Look at VFF. It was heavily oversold there on the weekly time frame, and then a massive move. Look at SNDL. We had our bear flag target reached on the weekly time frame, so I'm starting to kind of just think about how much more downside are we really going to see from here when a lot of other names are starting their weekly oversold bounce. We have weekly bull flags, weekly trend changes across the sector. It's great that we're seeing VFF and a few other outliers, but we need the whole sector to join. And if SNDL were to join, then that would mean that it would have to hold the lows here at 126, start the weekly bounce with a high of 138 break that'd be the high of last week broken, weekly bounce underway. Then we have a lack of resistance until $1.55, and if you break $1.55 from here, that would be a weekly uptrend confirmed. So as of right now, the trade would be to enter a little bit here. For example, if you entered a little bit at 132, you entered a little bit at $1.25, which is the weekly bear flag target, and then another entry potentially there at $1.15. And then what you could do is lower your cost basis, right? So let's say you get your cost basis down to $1.25 or $1.20, or even if you're really patient, you could wait and see if we get to that 115 target there on the daily time frame, because like I said, there's always leaders and laggards. And as of right now, we're still expecting another leg down with that daily bear flag confirmation. So what you could do is be really patient, look to get it closer to that $1.15 area, and essentially set your stop just below $1 and play off that $1 psychological. And here's the risk versus reward that would come with this trade, right? And that's the name of the game. You want to have a high reward, low risk trade, and this is one of those trades because of how close we are to support. It's also a weekly inside bar, so it'll be very telling which way we break out of this tightening range. But if you just, say you have an average of around $1.20, and then you set your stop, you're essentially risking 20 pennies, right? 20 cents. So if you go down to just below $1, you're going to risk 15 to 20%, but you might not allocate a huge amount of capital to this trade either. But if we're right and it bounces off $1 and we end up going back up to that $1.55, might even go higher than that. We could even potentially hit that 164 area, which would be the next level of resistance. And if we zoom out to the monthly time frame here, we haven't bounced on the monthly time frame in a very long time. We had a small bounce here back in January and February, but it was only by really a few pennies. So 196, 198, yeah, it was only a couple pennies. So we have really no monthly resistance until 240. So if we're right about this, right, as it's forming a longer term bottom here, maybe you try to get it closer to 115 and then you're lowering your risk a little bit more there, essentially risking 15 cents. And even if you enter now at $1.30, you're risking, if you put your stop just under $1, about 24%. And if we're right and we go back to monthly resistance at 240, that's about an 84% of upside here. So essentially risk 10, 15%. If you can get your cost basis down that much to make upwards of 70, 80%, that's a great risk reward trade. And we could be gearing up for the first ever monthly EMA 12 and 26 bull cross as well, which would be huge. Look at it, for example, Oxley. If we just bring that chart up, it's very close to seeing its EMA 12 and 26 bull cross, and that would be the first in history. And look at the momentum that it's been seeing as those EMAs got tighter and tighter, and as we get closer to a cross. You can see here it's up almost 10x, so almost 1,000%. So again, we're starting to see this momentum come back to the sector, and international has been a huge driver right now. And SNDL, we'll see what happens. I think there's the reason why it's a bit weaker than most right now is just because of the fact that there's some uncertainty with regards to the listing. Are they going to delist from the NASDAQ, and are they going to trade on the OTC? What's going to happen to my NASDAQ shares? I did a video on that as well, so if you haven't seen it, just go to my channel, type in SNDL, delisting, what happens to my shares. I talk about, if you're holding on Robinhood, what happens, but essentially you still own the shares unless the company goes bankrupt or something like that, but you can transfer them to a different brokerage that allows OTC trading. Robinhood doesn't. So there's some other brokers that would allow for this to happen. Or you could, there's a few different ways that this could go, right? Like if you're in Canada, you might own it on the CSE. But if you're in the US, that's unfortunately, the reality. But again, it's very early. We don't know what's going to happen. But I think because of that uncertainty, that's why the stock has been lagging. We haven't really seen it kind of catch a bid with the rest of the sector, and we're sitting here near all-time lows, right? And this is one of those meme stocks as well during 2021, so it can really fly when it wants to. But yeah, I like this for a nice trade here, playing off 115. You could even, like I said, enter a little bit now, a little at 125, a little closer to 115, get your cost basis down around 120, 125, and then look to swing this as a multi-week potential multi-month trade. If we get some sort of kind of improvement with regards to, well, I don't think there's going to be any excise tax improvement anytime soon in Canada, maybe a 2026 story, 2027. But I would say most likely at some point in 2026, we get some sort of update with regards to excise tax switching to a percentage fee. But you have to remember that, SNDL also has retail and alcohol, so it's a little different. They don't pay as much excise tax as some of these other producers. But it would be huge for the sector, right? The sector would absolutely explode if we get rescheduling. We know that's going to be a top priority for the new DEA head, Terrence Cole. So if that happens, or we get safer banking, that actually gets signed into law, that could happen at some point this year as well. If not in 2026, I think at the latest, makes the most sense to me. And these stocks would absolutely fly. But I think some major news is going to be coming. There's talks about basically flipping from one stamp from about 13 different stamps. So they have 13 different stamps right now that they have to do in terms of Canada and different provinces and territories. So flipping that over to one, that's just going to show more reassurance to the market that, you know, the government in Canada is taking the industry seriously and is looking at supporting this industry. That would be, you know, a great milestone and a stepping stone into getting some sort of excise tax as well. And if we get, you know, convenience stores, things like that, selling beverages, there could be some big changes coming here just at home, right here in Canada, and then factor that in with some of the catalysts in the US. But like I said, I think this thing is gearing up. We could see a MACD bull cross here on the weekly time frame as well. A lot of names are starting to see that. Look at OGI. It already had its MACD bull cross and a ton of upside. Look at VFF on the weekly time frame, had its MACD bull cross and a ton of upside. So again, if SNDL sees that similar move, we could easily be back up around that $1.60, $1.80. And if you really wanted to play it conservatively, you could just put your stop below $1.26 and try to nail that weekly bottom and uptrend. But personally, you know, with the uncertainty of the delisting and whatnot, I would just be a little bit more err on the side of caution and look to potentially scale in is how I would do it. Again, I'm not telling you to buy or sell or hold. I'm not giving any financial advice. It's just a trade setup and idea that I was looking at. I might even take advantage of it as well. And I'll be looking to scale in if I do pull the trigger on this. But I wanted to share this with you because I had a lot of requests about SNDL lately and why it's been lagging, and I think that's the main reason for that. But again, potentially could see, just technically speaking, also with this fundamentals and uncertainty with the delisting stuff, it would stand to reason that we could see another leg down. And then, like I said, take that scale in approach, try to get your cost basis down as low as possible. $1.20 would be great. And then, you know, risk 20 cents to make, you know, 80 cents or even $1 on top of where the price is now, right? We could easily be at $2.30 over the coming weeks if we see anywhere similar to some of the moves that we've been seeing. Like look at CGC, for example. What was the percentage? 110 from the low to the high there. Yeah, it was up about 110%. So if SNDL from current level, well, we'll go off of the low there. So if it was to see 100% from there, you're looking at, I have to extrapolate that out a little bit. Wow, yeah, it's been absolutely crushed. Let's just take a look here. So 110% would be around 260. So I think we could easily be up $1, maybe even higher than that from where we currently are over the next few weeks if we see the rest of the sector. SPY too, right? SPY's been an absolute juggernaut. It's been V-shaped recovery and less than 5% away from all-time highs now. But with that being said, SPY is likely due for a cool-off session, and SNDL hasn't been reacting bullishly, even though SPY's been bullish. So if we do see some headwinds from SPY and a healthy correction on SPY, which we know is going to be inevitable, it's due for at least a weekly high or low at some point. That wouldn't set up well for SNDL. So again, that increases the odds that we could potentially see this one more leg down to around $1.15. So again, really want to stress, if you are going to look at this trade, I think taking that scale-in approach and trying to lower your cost basis makes a lot of sense. But we have nothing nearby in the weekly moving averages as well until $1.75, daily time frame $1.44. The 200-day moving average, I think we should get back up there. We already had the death cross and tons of downside, so now we're going to be looking to get back up to our daily moving averages and potentially see a golden cross over the next month or so. It's going to be a while based on how far they are. But we generally gravitate back towards these moving averages, and that is what I anticipate happening, especially with the rest of the sector doing so, right? If we take a look again at VFF, everything looked pretty bleak there for a while, and then in no time, there we are over the 200-day moving average. So I think something similar could be coming for SNDL and then the rest of the names that haven't already done so. So, yeah, take it as you will, and if you're looking for a swing trade, like I said, this could be a great opportunity. If you're a little bit more patient, maybe you want to try to get it closer to that $1.15 area, or if you're like me, you know, it probably makes more sense to just scale in, lower your cost basis, set your stop loss, allow a little bit of wiggle room, and look to swing this thing for multiple weeks, months, and, you know, like I said, risk essentially 15 to 20% to make 80 to 100% plus on this trade. So going in it there. hopefully you found value in this video. If you did, smash the like. I would appreciate it. It's Rod with Power Group. Thanks again for joining us on the Pursuit of Wealth. And yeah, we'll see you in the next video. Take care.